Da, 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 da. All right, we are live. We are live and ready to go. Let's make sure I cut this off.
Nice.
Mm-hmm.
I get my sip of water.
Okay, another episode of the Things I Wish I Knew About Money podcast. I'm your host, Camille Smith, and I have a special guest again. Why? Mr.
First
Kurt.
repeat.
You are the first repeat, actually. Why? Hold on, I always have to have the sound and all that good stuff. And I got it. Oh. There we go. There we go. Thank you for coming back on, sir.
Glad to be here. Glad to be here.
We have a lot of things in store. Before we begin, I want to make a big announcement. We have reached 1,000 views.
Congratulations.
Thank you. I'm ecstatic. I just to know that, people are actually watching and learning. I'm always getting messages. Andre's always getting messages and all that good stuff. So I'm really excited for this journey. Also, we have 1,800 listens. Jeez. On the podcast. So for all the listeners and all the viewers, y'all are the real MVPs. So it's only right that we do a giveaway. Whoa! And
what do I get?
What do you get? You get a chance to be on here. See? Look at your prize already.
All right. I'll take it.
Exactly.
Also, the spotlight.
This is the 50th episode, by the way. Technically, it should be the 52 episode, but we took some time off. So it's been actually a year since we've been doing this. So, geez.
That's awesome. Most people are like 7 episodes and then they run away.
Right? Not I. I had to make sure I kept giving heat. So I think it's only fair to do a giveaway to subscribers that are on YouTube.
Just like another discount to Andre's Villa.
Exactly. If you guys are able to give him them type of messages, you'll still get that discount guaranteed. I have bags to give away. Andre also said he will give away a Flip and Floss card. So that's another one. I should have showed it. Actually, I have it. Give me a second. I will show it, what it looks like. So everyone that's online, so everyone that is watching, this is the lovely, oh gosh, the glare.
The card set. Flip me.
Yeah. Yes.
It's a card set, everybody. It says flip me, just for those that aren't seeing the pictures. The card set that says flip me.
Oh, man. Yes. So that's a giveaway. I have bags. Also, a free hour consultation with Camille. I will describe the details of the giveaway tomorrow. So give it a chance for everyone that's listening to the podcast as well to get in. So first of all, you have to subscribe. and then you had to like this episode, huh? And also, today was a crazy day, Kurt.
How are you sure? How do they know they're gonna get it? You're just gonna it's a random pick after that?
Yeah, there's a way that you can what is it? I always see people on IG doing these raffles and all that good stuff. So I'm gonna just use like something like that and make it nice and easy. I want to keep it easy.
Cool.
Nothing hard. You know me. I don't want to struggle. I don't want to struggle. And also, I wanted to give a shout out to Black Owned Toronto downtown at Eaton Center. I was actually there for their grand opening. There are a lot of Black owned things. That is amazing. I got some earrings from Rooted by Royalty.
Nice.
I also got a stainless steel straw from Santos and Cruz. I actually met them in the line at the time, so I wanted to support them. I got a bottle opener. So whoever's watching this, you can see what's happening. So you just have to join in on the fun. I got a coloring book, an adult's coloring book from Sophia. I also met her at the event. So definitely we'll be introducing these people on the podcast soon. And what else? I got a head tie because I gotta keep my hair nice and silky.
That's a lot of shopping. You must have did good in the markets this week.
I'm glad you talked about that. Kurt. The reason why Kurt is here is because he is the guru of the stock market. I have to first give you your flowers again because you introduced me to options and futures. Oh. This week wasn't that great, but last week and just me continuing to learn and stuff, I appreciate you a whole lot because you just helped me get more money in my pockets.
Yeah, that's all about.
Exactly.
Thank you for a loan soon.
We'll see. So where do we start?
I'm only joking, but I'm sure there's some listeners that are thinking that I should hit you up for a loan pretty soon.
Hey, I make sure I accommodate to what Kurt does because he's my mentor. He always gives me the knowledge and all that stuff. And I thought to myself, why not? You guys will be able to get a little sample of the knowledge that Kurt provides to a lot of folks and things. And if you guys don't remember Kurt, would you please tell them a little bit about yourself? Just in case, sometimes people forget.
A little bit. What did we talk about last time? Well, I'm an investor. I've been in the financial industry for quite some time.
Yeah.
Particularly on the institutional side. So normally I don't deal with individual investors in the space that I'm in. And I picked up investing on my own. And so in the process of working in the investment industry, I ended up just learning how to invest my own money, my own funds. And so between that, learning my own personal finances, I had to figure out how to get debt free and then how to build a nest egg for myself just in case I don't work anymore, either by choice or by force.
And how's that been so far?
How has that been? It's been good.
Yes.
I've enjoyed the journey of investing.
Yeah.
And work has been work has been challenging. And so, but there's a lot of opportunities on the horizon. And so we'll see what happens.
I'm excited. To hear. And then what? We also have Financial Literacy Month coming up next month in November.
That's right.
What do you have in store, sir? I know what I have. Well, we are actually once again doing a great webinar to Centennial. So big up the team and all. I think we call it the money team.
Yes, yes, yes. I think that sounds about right. Yeah, we got 2 presentations with Centennial coming up, educating students about finances. And then, but more importantly, the goal is that when November finishes, I'll have more money than when I started. And that would be a good financial literacy month.
Right? Oh man. I hope for that as well. Actually, that's what I'm manifesting. I'm manifesting fun, money, and just more growth and all that good stuff. And then also teaching our people, the Centennial College students, and also just our community, because that's what it's all about, right?
Mm-hmm.
That's what it's all about. So how do we start this? Like,
oh, what's the name of this episode?
that is true. That is true.
What do we hear? What's the name of this episode?
My money in the market. Mm-hmm. I just keep listening to songs whenever I think of these titles. And sometimes I forget them, but no, I want folks to learn more about the stock market, because the last couple weeks, it's been crazy. Like, I actually wanted to talk to you about it end of September, when it was madness. September 27th. I remember it like it was yesterday.
What happened on September 27th?
September 27th was a Mercury retrograde, and the stock market went like so. It was tanking. I was in a play, and I was like, oh, and it hurts. And I was, you always told me that I have to have a trading plan. And sometimes I'm human and I don't listen. But after that time, I was like, okay, I need these trading plans to come into play, because my heart can't take so much red.
Okay. Yeah, plans are important. Well, you recovered.
I did. So I just knew, like, at the end of the day, in September, historically, the market goes down. So that's like the best time to actually buy. This thing I did is I bought a little too early. A little too early. But it's okay. It recovered, and I'm just
it's all a part of the process. I can say that my biggest wins have always come after my biggest losses.
true.
So it's something that you learn from.
Yeah.
And then once you learn from it, you tend to be able to apply it going forward, and that's what makes a big difference.
Exactly. But I thought like this episode would be great to show and explain like certain ways of the stock market, because a lot of times people say, I just don't know how to start. What do I do? And I just feel like it's time to like execute on what you learn.
So what you're saying is everybody got to get their pen and papers out, because we're going to give them the basics. Like, if you haven't touched an account before, you got pen and paper in front of your computer, now is the time to pull everything out and get ready to get started.
Exactly. And so let's start with like the very basic. Whether it's opening an account or choosing a brokerage, which one do you think we should start with?
Well, you got to choose the brokerage before you open the account. So why don't we talk about the different brokerages that people typically use or have gotten into.
Do you want to start with yours first?
There are some that well, I use different accounts. I've used quite a few of them, actually.
Oh, really?
I've used quite a few accounts, yeah. I've moved around a bit. I was those firms ain't loyal, so neither am I. I have to keep moving my money wherever it works. But if you think about, like right now, some of the newer ones I probably haven't used, like, you know, Wealth Simple, I have not used before. And that's because it's before my time.
Yeah.
And it's an account for beginners, free trades, but it doesn't have a lot of the things that I need to be able to transact. And there's not, but for a beginner, you got less than $1,000. You're investing in only Canadian stocks.
Yeah.
You're getting free commissions. It's a very good way to get started when you're starting out with less than $1,000.
Unless you want to delay for like 15 minutes. And we're not talking.
Placing a trade with a price from 15 minutes ago just sounds strange.
It's that's cringeworthy.
But that's the downside. That's the downside. But the upside is that you don't pay commission. When you don't have $1,000 to your name, it's a good start.
That is true. That is true.
It's a good start. It's better than not starting.
So I think a lot of folks have they just don't know where to go. So I'll name a few. So there's Wealth Simple, and I'm pretty sure like most people, especially most beginners, start with Wealth Simple. Like every time I have a discussion with someone, they're like, yeah, Wealth Simple. Like, cool. Especially if you have Canadian stocks, that's fine. However, if you have American stocks, it actually, there's a certain type of fee with the American stocks. So you want to be careful with that, at least with the account that I use, which is Questrade. You can actually have a Canadian account and a US account. So it works both ways. And I think, Kurt, what about with TD? Is that the same with TD? You're muted.
TD, there's a few things to take into account when you start thinking about choosing a brokerage. One is commission. And so we talked about Wealth Simple being the
free 99.
Free being the free game in town.
Yes.
And then that's only if you're dealing with Canadian stocks. If you're dealing on the US side, then there is a significant Forex charge that you get charged, I heard. And so you got to be aware of Forex if you're doing things cross-border, but that's, those things you can get around. And the other thing is minimums.
Yes,
right?
Minimum deposits.
There's the minimum deposits, right? So when they say, yeah, you get, $5 trades, but you have to have $15,000 in the account, or you're paying a higher fee, then you got to be careful for that stuff. So or they'll charge you inactivity fees. So you'll have to pay. You'll pay a quarterly or monthly fee because you don't have the monthly minimum in assets in the account. So you got to be careful of those things.
Questrade used to have that, and at first I was annoyed, but then I thought to myself, that just means I actually have to fund the account, because I was just doing like lump sums and not really thinking about it. But then that's when I actually started contributing to it more. So it actually helped me in a sense, because I was like, I don't want to pay $25.
Yes, it's a significant charge when you have a small account. Like when you're under 1,000 or you're at 1,000, they're charging you $25 a month or a quarter. It adds up, and it takes away from your profits. And so you got to be mindful of that stuff. The minimum charges, whether you're getting pricing included. And so some accounts will charge you for access to pricing and access to different things. And there's pros and cons to each one. But I think on the entry level, you're looking at making sure that you have accounts that have reasonable minimums. That typically is an online brokerage outside of the banks. Or within the banks, I think you can do a TFSA account if you're in Canada. And I think that's equivalent to the Roth IRA in the US or something like that, where you can contribute to your account, and there's no fees associated with it because there's caps on how much you can put in the account. But the
Mm.
commissions at the banks,
Yeah.
they're still a little bit higher. I think for me, it's easier to swallow because I started at $30 a trade for commission. So
Oh
right
my
now,
God.
in this day and age, all commissions look cheap to me, whether it's $10 or $5 or $1. They all look cheap from where I started
I
because you
can
had to make
only imagine.
money at higher rates. So you don't want to imagine those fees.
I would have
When
been
you have
crying.
when you have $50 to buy a stock and they're taking away $30 for commission, oh, you don't want to experience that.
Jeez.
But that's the thing about today, there's no excuses around not starting, right?
Mm-hmm.
If you can start with $50 and $30 commission, then you can start with $50 and no commission. So you're
That
already
is
ahead of the game. There's no
that
fees on the
is
transaction for some. So there's literally no excuses. If you can buy, 5 lattes, that's $50. Then you just take the same $50 and buy some stocks. Actually, that was one of my rules when I first started. I said if I have enough money to have fun, I
yeah,
gotta have the same amount of money to invest. And
that's a
that was
good
kind of one of the things that I did. So if I only had $50 to have fun, I had to have $50 to invest in my future.
dang. That's actually a good theory because a lot of people always say, and I'm only going based on like the ones that haven't invested or are scared to invest, that I just don't know how to do it. I don't know how I'm gonna find the money to actually invest. But and then I think they see the Teslas and the Amazon and all that stuff, and they get worried when they see like a $1,000, $3,000 stock. But there are stocks that you can get for $50. You remember my rule?
There are stocks you can get for $50. There's even stocks you can get for less than $50. It just depends on what they are. And they're
Yeah,
stable ones. And you can do other things like ETFs, etc., that help get you a basket of stocks,
yeah,
including those $3,000 stocks that are included in the basket, and you can buy it for less as part of a basket. And so there's
exactly.
there's always there's no excuses. There's no excuses. If you
There's like
have
no
if
excuses.
you have $50 to have fun, you have $50 to invest in yourself.
That is true.
And it's a choice that you have to make.
Choices are everything, right? How about let's see. So there's different type of brokers to get it, and then you did mention TFSA. Are there any other accounts that people can open up?
It depends. So obviously we're speaking from a Canadian perspective. I don't know the full. We have RSP, which is equivalent to a 401k in the States, I believe.
Yes.
And that's essentially a retirement account that you can set up for yourself where you get a tax deferral when you contribute. You can set up one of those. Some of us have previous pension plans, and you can convert those pension plans into liras, which is a locked-in retirement account. And yeah, locked in just hurts already, but it's you can't touch it until you're 55.
55?
So
Okay.
55, you can't touch a lira till you're 55 years old.
Wow. Wow, wow,
Yeah.
wow.
And then
I've,
you have it's to protect you from yourself. That's what they say. Because people will take that money and go on vacation, like, yeah, I got money. And then when they retire, they're like, where's my retirement money? You spent it on Hawaii. So
oh
they
no,
do it to protect you.
yeah.
And then you can have obviously non-registered accounts, which is that the TFSA has tax advantages, the
Mhm.
RSP has tax advantages. You can have a
Yes.
non-registered account, which doesn't have any tax advantages relative to the natural tax-free environments that are set up for tax deferreds. And then you have another one that is for those that have children, which is the
Ooh, do tell.
RESP. A lot of people don't realize that with their RESP, they
Hmm.
can open up their own account and just start investing. And that I don't think they're going to charge you fees on that account either because they have caps on how much you can invest. And so if you it's a win-win-win in that one because you put in $2,000, the government puts in another $500, and then you can have all that money grow. It's a right. You're making 20% just from putting the money in the account, which is the free 20%. I don't, I would like to start off the year up 20% on January 1st. I don't know
Right?
about you, and then And then after that, you can have the account grow even more. And so it's definitely a win-win on that if you choose to invest in the markets with it.
Nice. And you know what? A lot of people have been asking me about that too. And I think they're concerned about like, okay, but what if my child doesn't go to school? What do I do? I'm
You get
like,
your money back.
okay.
And you get to keep the profits.
Ooh.
But you just have to give back I believe you get your money back, you get to keep the profits, but you would have to give back the grant portion.
Okay, that's fair. That's fair.
That's still a win, right? If you can have that money grow and then at the end of the case your kid doesn't go to school, you still get the money back, right?
Ooh.
You might have to pay the taxes on the gains, but that's only a percentage of what you made. It's money that you wouldn't have otherwise had.
Okay, good to know. Okay, so folks who have children, start investing.
There you go.
Because you can get the money back, if anything. Because I think in the past people had an issue with the RSPs, right? But I think that was like the
well, it's tax deferred. You pay taxes on the back end. With the RESP, same thing. You pay taxes on the back end. Either the student pays the taxes or the parent pays the taxes. Whoever withdraws the excess pays the taxes. So if the student takes it out, the student pays the taxes. If the parent takes out the profits, then the parent pays the taxes. And that's kind of how
they have to pay them taxes. The tax man always gets you.
One of those certainties in life.
Oh man, okay.
Even when you're dead, they try and collect.
Trust me. So we have the TFSA, the RRSPs for registered accounts, the RASPs for kiddos, and then we also have non-registered accounts, which isn't it a cash account or margin account?
It is for the non-registered.
Mm-hmm.
Yeah, you can do cash or margin.
Okay, so then
if you're going to do options, you're definitely going to need a margin account. But it's not where you start as a beginner. As a beginner, you open up a cash account and you just start buying stocks, and you just go from there.
Yes. So let's not fly before we crawl. Let's not fly before we crawl. Also, with a non-registered account, whatever gains you make, you're gonna get taxed. So I think a lot of
people,
sell. Only if you sell, yes. Okay, only if you sell. Don't worry, we don't have to worry about the non-realized gains.
That billionaires tax that they are proposing in the States?
Oh man, but I hear it could be here too.
Well, I'll worry about that when I get there. Right now, I'm sure the billionaires can take care of themselves. They don't need us to be worrying for them.
So basically, no, let's stay with the basics. Because I'll explain that later. How about what would be the right first investment?
The first investment. Actually, before the first investment, I think we missed a couple banks. So we'll get back to that in a second.
Oh, yes.
We got Questrade, which we haven't talked about. I think he used Questrade. You should probably talk to them about that.
Yes.
And then there's Interactive Brokers, which is another one that's more international and is a publicly traded company as well. So most people probably have heard of it in some way. But how is Questrade?
I like Questrade because when I was introduced about it, I was looking at TD. Me and TD don't have good history. So I was like, I need to find another way. So I heard about Questrade, and $4.95 per transaction to me is not bad. And then also their ETFs are as little as $0. Unless you're getting a large amount, then they charge you I think last time I was charged about $4.95 or less based on the amount of ETFs that I got. But normally it's it's usually free. What else? I like their app. It's very easy. I can understand it very well. And I know, even though I'm like a do-it-yourself type of lady, I should be looking at their education center and just learning a little bit more. But I actually just go on YouTube to learn like more stuff. So I like it. I like it so far. And I have no complaints because like I can still get real time with it. I don't have to pay extra. The time when they were charging that $25 for inactive fee, I was pissed. But then I realized that I haven't been utilizing it as I should. So I was like, you know what? Let me actually get more involved with the stock market and see where it could take me. And so far, so good. It's just I had a mindset of, and I shake my head all the time. Like I used to say, no, I'm Canadian. I'm going to get Canadian stocks. What was I thinking? I accidentally got AMD because I was looking at like a practice account before, and I was like, ooh, it's gone up. Let me get this. And that skyrocketed. And I'm just shocked and appalled that I had that theory in my head. So I had to reprogram my mind to say, okay, let's get American stocks because that's where the money is. I don't like the exchange rate, obviously, but it's making money. I can't complain about that. But there are some Canadian stocks that I found that are really good as well. You just have to do the right research and all that.
The US is just such a bigger market, so there's more opportunities out there. But there are definitely some Canadian gems out there.
And then those dividends. Ooh, I love them dividends. And then I think this is what happened. I had a dividend that was American. And then all of a sudden I realized that they were taking out like 15% on my dividend. Yeah. And I was like, you know what? I don't care. I'm okay with like the small amount now, but most likely when I continue to build it, I'm going to transfer it like to my RSPs because it only makes sense. Yeah. Right. And I think that's what was one of the things you said, like, if it's an American stock, you should try to put in your RSPs so you don't have to worry about that withholding taxes. Yeah. So I like Questrade. It's simple, and I was able to do options. Once I found out I could do options, I was like, why would I go to anywhere else? Until you introduced me to Interactive Brokers.
Yeah, Interactive Brokers is probably the cheapest game in town when you factor in volume. If you're a very low volume person, i.e. you're not doing like even a trade a month or so, or 2 trades a month, then you could probably stay with Questrade or any other brokers that charges you $5 or $10. But once you get into anything volume wise, then Interactive Brokers is the cheapest that I've seen in the business, like where you're paying $1 for a transaction or you're paying 50 cents for a transaction. And you don't really get that. But they do have, the downside to that is they do have, everything is a la carte. And so if you want access to pricing, you have to pay for it. If you want access to pricing in the US, you want access to pricing in futures, you want access to pricing in Canadian stocks, you have to pay for whatever you want access to. It's not a large amount, but it does add up if you want exposure to a bunch of markets. But I think that you can get, I think you can get full exposure to North America for about maybe $20 a month, 20 or 30 bucks a month. Then you think about futures, options, Canadian equities, full pricing across North America is probably get you to about $20 a month.
Okay, so with that, so
and then they waive it if you spend it in commission.
Exactly. So like a person, so I'm called Barata, El Cheapo. So ideally that bothered me at first, but then the gains I've been accumulating, I'm like, does it really bother me to pay $20? But most likely it's waived. So it's a
It's waves,
win-win.
and you won't get access to futures in other markets without it. Right? You
Exactly.
can't
So
get access to that on Questrade and other places.
yeah. So that's just one thing. Like I was okay with getting I was okay with using interactive brokers as well, because I'm trying to build my knowledge of the stock market and options and futures. Oh my gosh.
Yes, but today we're on the basics.
Yes, basic,
Today we're on
basic.
the
I'm
basics.
sorry, guys.
We're on the
Basic, basic.
basics today. We're on the basics.
So, but when it comes to even the stocks, it's freaking cheap. It's pretty cheap.
It
It's
is.
like less than $1. So I do
No
look at it
excuses.
more.
Buy your first investment. No excuses.
See?
Buy
No
some
excuses.
anything.
Anything. Well, not anything. Well, what was your first?
Anything.
Yes, what was your first investment though?
My first investment was when I got out of school
Mm-hmm.
a long time ago. I had this idea that alternative energy was gonna be the thing. So I was like,
Mm-hmm.
that's it. Alternative energy. We're getting rid of oil and gas. Well, apparently it's still here. But and if you've gone to the pump lately around here, you'll see that prices have gone up like
Gone
crazy.
up. No.
But I had this idea that alternative energy. So I found a stock called Alternative Energy.
Yeah.
And so obviously when you first start, you think that you've just discovered, you're the only person to ever discover the stock. I bought it, and it was probably about 30 cents at the time.
Yeah.
And just like that, it was like 10 cents, filing for bankruptcy. And it was a lesson well learned. Even though, looking at it, it was tough to swallow at the time. It was all my money gone.
Mm-hmm.
But it was a good lesson, because
Yeah.
after a couple of those, I was like, I got to pay attention to what I'm doing. I got to research. I got to study. I got to make better decisions. So
Yeah.
whatever you buy, it's just fine. Just buy something.
True.
Now, hopefully, if you want to learn from my mistake, buy something that you know very well,
Mm-hmm.
and something that you can invest in, that you think will be a part of the future, and is already a part of your life that you're using. So I bought alternative fuel company that had nothing to do with my life, and it went bankrupt, and it will never have anything to do with my life other than losing me money. But that's what happens sometimes.
True. True. I think so I can't remember my very first investment, but I remember for sure AMD, and there's another one that went terrible. ACB. I thought, ooh, weed's becoming legalized.
And you
I
wanted
should.
to smoke, so you got yourself some raw cannabis.
So I thought it would be genius. So let's say I bought ACB and AMD at the very same time. Once again, remember, it was a Canadian stock. And I seen AMD rising and I just seen ACB decreasing. And I was like, oh no, what's happening? And I remember when ACB went down all the way to $1. And I cringed and I cringed. And people were like, just keep at it. It's okay. They're gonna go up. They're gonna go up. I was like, I should have done my research more. Why did I decide to get into this thing? And then one day, I woke up and it was $10 again. And I was like, oh my gosh, it's a miracle. It's gone back up. Yes. So I went to my portfolio, but I still saw it in red. And I was like, what is happening? I realized it was a reverse stock split. And that was the day when I realized I hate anything that has to do with reverse stock split. And I got rid of it. And the reason why is because because there's two different ones. There's stock split and reverse stock split. Stock split is when something is too high and they want to help, us regular folks to get into the game, and they split it and make it go down to a reasonable price, so you're able to jump in. And you know what? It's genius. Tesla did last year, and that thing has like doubled or quadrupled since, right? But with a reverse stock split, it's the quite opposite. I think what the company is not doing that strong, so they have to like revert, like get, in a sense, get rid of stocks or combine them to increase the stock price so it looks attractive enough for people to buy. Correct me if I'm wrong.
The reverse stock split, yes. The other part of the reverse stock split is that most exchanges have minimum prices that your stocks have to be in order for you to be on the exchange. So they're doing a reverse stock split to bring their price back up to $10 so they don't get kicked off for being at $1. And
okay.
What that means is that it sends a signal. It's saying, okay, your earnings, etc., probably aren't going to be that good. So you're going to do the reverse stock split because you don't think you're going to actually be making the money that will drive the stock price up. And so it normally becomes a negative signal, which drives the price down.
So that's why I don't like whenever I hear reverse stock split. So I get notifications from the companies that I'm with, and once I see reverse stock split in the works, I get rid of it. I can't have it in my life. But then question, and because I know a lot of people are interested in it, because a lot of people like stocks that are affordable. Let's say affordable, aka cheap.
That is cheap, like, and affordable are two different things.
Okay, so cheap. I'll say cheap. So it's like $1 or so. So wouldn't that be considered a penny stock?
Yeah, I typically classify anything under $5 as a penny stock.
I know how people love them.
And normally they're pennies for a reason. Every now and then there are gems that do come out of that.
Yes.
And you can play that market. And there's nothing wrong with it. I've done it. I do it every now and then if I see a small company that looks promising. I actually bought one last year that ended up getting bought out. So I got lucky with one. But it's part of the process. But you want to be careful, because when you're investing in that space, it's significantly more risk in terms of the likelihood of the company going in the other direction, which is down and down and down with no sign of recovery.
Yeah.
And that's a lot of pump and dump happens in that space, because those stocks can be manipulated, right? You go on a chat group, you're saying, oh, buy this stock, buy, and you're looking at the price go from $1 to $3 to $4. You're like, oh, let me buy it at $4, and then everybody's getting out at that time, and then you're stuck holding the bag.
Yeah. You don't want to be holding the bag. That's one bag you don't want to hold.
So if your heart is not up for it, then what you want to do is you want to buy a safer first investment. Buy an ETF, buy a stock of a company that you know or you enjoy, that is not going to be, whipsawing up and down.
Yeah. So I think, I'm glad you mentioned that, because I think, and for anyone that like says they have no time, they just don't understand it, I always say just start with the S&P 500.
Index, buy an index. You want exposure to the market, just buy the market itself.
Exactly.
And you just leave it and let it sit there for a few years and you'll be fine.
Because I'll tell you this, and I had a little rant the other day, and I was like, it just makes sense. Like, there's an S&P 500 index or ETF that costs $53 or $54 right now, American. It's okay. Per share. And for the week that just passed, it's up 1%, 1.28. In the month, it's been up 5.7%. 6 months, it's been up 9.36%, and up to date, up to the year, this year alone, it's gone up 22.82%.
Yeah, which is the same as the S&P.
Yes, yes. So which bank do you know gives you that? You know my saying.
Bank of Camille.
So like it's like no brainer. Like there's no excuses. Just at least go with the S&P 500 because it has the things that we all love and want to hold. They have trying to find the holdings. They have Apple, they have Microsoft, they have Amazon, Facebook, Google, and that's just to name a few. Like it literally has 500 shares in one, right? So,
and all of the major companies that are at the forefront of what's happening, they are going to be a part of that.
And what is it the saying that if those companies aren't up to par anymore, they dash them away and bring someone else?
Yeah, the beauty of buying the index or indexing is that those funds have criteria.
Yes.
And they rotate out the ones that no longer meet the criteria or are strong performing companies or represent the industry, and they bring in new companies. If you think about it, it's always been 500 companies, maybe 499 or 501, but it's always been relatively depending on stock splits and things that happen or acquisitions, etc. But for the most part, you have 500 companies, and a lot of the companies that are in that index are companies that have only been around since maybe 2000, last 20 years, right?
Yeah.
Because what happens is that it's like a self rotation. They rotate in and out of industries and companies for you by nature of buying the index. So it saves you a lot of time from having to figure it out because they always pick the bellwethers that are expected to be a part of the future. And that's kind of one of the things that people don't realize is that the market is rising. When we talk about the market rising or the S&P rising, over those years, if you go back 20 years, there's a lot of companies that have been kicked out, and they've replaced them with companies that are going to be that they think are going to be a part of the future and meet certain criteria, right? So Facebook is in there now, Amazon's in there. If you go back to the 90s, these companies didn't exist, right? Or weren't available, and so think it's a self-correcting or a self-adjusting portfolio when you buy the index.
Nice, and there's dividends. Aha.
Yeah, whatever companies in the index pay a dividend, they pass that dividend on to you.
Yeah, so that's a good one, I thought. So that's kind of like active or passive.
That's investing. Passive. You buy the index. Let's suppose you have $1,000 right now. And you open up your account today because we gave you all the brokers you can choose from. You just got to pick one. And then you take your $1,000 and you buy the S&P, the SPY. Whether you buy the SPY or you buy the one that you mentioned, they're all kind of tracking the same thing. They buy the same stocks, but they have a slightly different price. Yeah. Then you just leave it there, right? And when you get more money, you add to it. And then you look back 5-10 years later, on average, you might have a down year this year or next year. So, well, not this year. I don't think we're going to go back to zero. This will be a down year.
Knock on wood.
That would be a disastrous year end if we ever ended up at zero this year. But if you fast forward 5-10 years, and the market has shown to go up even with corrections. There's not that many 5 to 10 year periods in which there hasn't been some type of growth in the market. There has been a lost decade, but we won't get into that right now.
True. It's like a roller coaster. Yeah. It's sometimes gonna go up, sometimes it's gonna go down. It's just, are you able to stomach the downfall?
Yeah, I don't know if it's yes. Getting a handle on your emotions is a huge part of investing in the market. And the sooner, as Camille puts her head down, the sooner, and it doesn't matter who you are, right? You're a human being. You're going to have emotions. And the idea is not, oh, pretend like you don't have them. It doesn't work like that. Right? When you're there and your heart is beating, you're not saying, I don't have, my heart's not beating. Your heart's beating. You accept it, but you recognize it and you're aware of it, and you combat that with taking a rational approach to looking at things and evaluating things, knowing that you're not in the best emotional state. But on a passive side, you buy the S&P, and if you have a long-term horizon, 10 years plus, then you just kind of weather the storm and you keep it going.
So that's a good one, because I think what is some issues for folks is they're thinking short term, and they're thinking this is gonna pay my bills and stuff, which it can, but long.
It's this constant desire for immediate gratification, and people struggle in this day and age with delayed gratification. Think about it. We're in a day and age of social media. Something happens, you find out right away, right? If there's drama going down and you can't find out, people are stressed that they can't find out that the drama is going on. You put up a post on Instagram and you put down your phone, you pick it up 3 seconds later, you're like, no one liked my post yet? They want to like right away. Like they're like, how come I don't have any? I put the post up and no one's liking my post, right? Or you post on Facebook, or you right? People want everything right away, but big money is made by delayed gratification. Right? Small money is always looking for quick gains, right? You can make $50 here, $100 here, $20 there, but you buy a stock, you hold it for an extended period of time. That's a good company. You monitor it, watch it, and you'll be much further ahead than trying to get in and out of that stock over any period of time. Because it's hard to pick the tops and bottoms. It's easy to look at a historical chart and say that was the top and that was the bottom. But when the bottom's falling out, try buying. And when the bottom's, when you're at the top, try selling. It's
buy low, sell high.
Yeah. So.
And you're so right. The emotions, the days I have to just like talk down to myself and like, just chill. It's okay. It's okay. I talk to myself a lot when it comes to the stock market.
Yeah, if you don't have anybody to talk to, you better talk to yourself, because it's a part of the process. And even now and then, you do your research. I do my research. I make an investment. I'm still a little nervous, right? You never know what you don't know. But it's like, I did my research. I did my checks and balances. I'm pretty confident. I know what I think some of the downside potential is, and I know what the upside potential is, and you get in.
So I guess a great question is what's the perfect places to research for the stock market? Because
depends on what you have access to. So I think if you're just getting started, then use your platform.
Okay.
Right.
True.
Now, I think for the platforms that we mentioned, like the banks have research available to you. I think Quest might have some learning stuff available to you.
They do.
But then there's also the internet, right? And you have different websites that give you information. And I'm being general because the ones that I used to use when I first started, they're not that good anymore. Like Yahoo Finance used to be a really great source of information and news, but now when you go to at least from a news perspective, it's a lot of ads. I think too many ads, but that's where the internet is heading, right? Where the internet is heading is that ads are going to be the first thing that you see for everything, because that's how everybody makes money. And so it's lessening the quality of what you're seeing. And so what I'm finding is that in some cases, to get better research, I have to pay for it, right? But in the beginning, when you're starting, you can do first principles, right? Think about the things you use every day. You got up today. If you've been on Facebook all day today, then maybe you buy Facebook, or should I say Meta? Yeah, maybe you buy Meta. We're gonna have to cancel that. Meta. I gotta get used to saying that.
Because once you, whoever listens
And
to this, like years from now, because it's gonna happen.
yeah, of course.
Meta, yeah, META, yeah.
Yeah. And they're changing their ticker, so it'll be like MVRS. But you know, you're on Facebook all day, so and you're on Instagram all day, and you're on WhatsApp all day. Well, they're all owned by the same company. So I want to buy that, right? Or if you got, you know, you're into
TikTok, Snapchat.
TikTok, yeah, TikTok is owned by I think Tencent, which is like a Chinese company. So I think you can buy them too. But whatever you're enjoying, you know, or the way that I used to do it when I was after I took a few lumps, I learned a conservative way of investing too. So it's not always about high risk, right? But I had a gas bill, and the gas bill company was a publicly traded company. So I bought the publicly traded company. It was Enbridge. So I bought Enbridge, and I used the dividend that I got from Enbridge to pay my gas bill. Right? True. And then I also had the stock appreciation. And so there are conservative ways. Now, Enbridge is not going to double and triple next week or anything like that. It's a conservative stock. And so you balance out your portfolio. But in the beginning, buy something, anything that you're familiar with that you know how to watch and monitor, and just go from there.
Actually, that is true, because I once I got my new laptop, or like, yeah, actually my computer and my laptop all have AMD. So I was like searching. I was like, I don't want Intel. I don't have their stock. I want AMD. So I started like going with that theory as well.
Yeah, look at the people that buy Google. You know, everybody that owns Google stock, when they do a Google search, they always click on the ad one, you know. Right? You always click on the ad. You click on the paid ad because you know you're putting money in your pocket. Exactly. It's a self-fulfilling process, right? Where all the stock owners are going to be like I just did a Google search here. You know, click on this one, this one, this one. There's about 10 ads here I can click on to make Google more money.
Dang. So so basically, folks, ladies and gentlemen, when it comes to what you're purchasing, when it comes to groceries, when it comes to gas, when it comes to anything in life, clothes as well, look at those type of things to research as well.
Yeah, just think about it. If you're spending money somewhere, think about if that's a place that can actually make you money in the market.
Sure. Especially if they have dividends. Whew. Yeah. That even makes it more sweet. Right? So and that's another. So dividends is a passive investing. Is there any active type of investing?
Well, when you think about active investing is really about
just always on
being involved, always on there, monitoring, you know, frequently, whether it's daily, weekly, you know, you're placing trades intraday or swing trading. That's active. And that requires a completely different skill set because let's face it, nothing changed between yesterday and today most of the time for most companies, right? Or nothing that you can actually observe that something changed. So that's a completely different mindset around being active. That's the extreme of active. The other part of it is, hey, I want to do long-term investing, but I want to pick the companies myself, right? Rather than doing an index, I actually want to learn the ins and outs of picking a company. Rather than buying an index, I want to buy Facebook myself instead of buying the SPY that has Facebook. I want to buy Amazon myself, or I want to buy whatever it is, Roblox or Unity Software, whatever company people are interested in nowadays. Or I want to buy Apple myself, right? That if you want to be active and research the companies and buy them, you can still be active and do that as well too on a long-term basis and build your portfolio out like that as well.
And with picking like certain stocks by yourself, you obviously have to do the research we were talking about before. And you said you liked Yahoo Finance. I like them too. And that app has been taking up a lot of space.
I use Yahoo Finance. It still has a lot of good tools.
Yeah.
But the news feed is not that great anymore. But the portfolio tracking monitoring, it gives you the earnings announcements. It gives you where you are with your stocks. You can actually plug in like your mock portfolio in there so it can monitor it for you. There's a lot of great tools on there that I use right now as well.
And then there's another one I use is TradingView. Like
yes, for charting.
Yes. So I've been learning how to do to read the charts. Because I do like a swing trade. But it also gives you like technicals, so you kind of know like, okay, should I buy this? Should I not? Why should I? And then you just look at the history, and it's a great tool to use when knowing like even when to buy like a certain stock. Because like what happens a lot is people buy it at the highest because they panic and they're like, oh, I gotta get it because it's going up. But
FOMO.
then, yes, FOMO.
Mm-hmm.
And then it drops and you're like, but if it's a great stock or a stable stock, it will go back up. It's just you want to try to see like the history of it, right? Seeing like, okay, is it gonna pull back? Most times it does. I want to get it when it pulls back, and then it will ride back up, and then I'll just be like, that was amazing. And then long term, right? So TradingView, Yahoo Finance. I sometimes use Google Finance. I mean,
yeah, Google Finance is useful too, especially when you put in names and companies. The tickers tend to come right up and they give you information right away. So Google Finance is useful as well. I don't find it as good as Yahoo Finance, but it does give you the basics when you first pull up a company.
True. And then what's another one? Or I know your TV's on and just listening to what's happening in the stocks. That's a different level.
I don't have it on all the time, but sometimes I do. Like if I'm being active or I'm doing some quiet work and I can listen to it in the background, I'll listen to it for sure. It kind of gives you it helps give me a sense of sentiment, where the market is, where the energy is, that type of thing, and what's going on and what's current. But the market moves in waves, and so most of my research, it tends to be, when I think about it from a long-term perspective, most of my research tends to be about the future. And so I don't let what's happening on the TV distract me too much, because I know that it comes and goes, in anything. TV gets paid to hype things up. And so what you're going to get is the current hype. And then when the hype fades, they're on to the next thing, right? And so when I think about it from a long-term perspective, it's more of, okay, this is a company that I think is going to be a part of the future, this year, next year, the year after that. And just buy it and let it ride out and monitor my thesis to see if I was right.
Okay. So we got that. So the TV, the Yahoo Finance, Google Finance, and also TradingView as well. And then also books, articles, books. There's
lots of them out there. No shortage of information.
Yes.
Free information, paid information. There's a ton of it.
They hide all the information in books or audiobooks. So if you want to know
it's called hiding if you don't read.
So there's so many ways, and YouTube. Like I kill YouTube. Like the way I love YouTube, and just learning. I mean, I should get Google. Huh?
That's a new one. But yeah, if you're using YouTube that much and Google, then wait for a dip and get in.
One day.
You got a YouTube channel going on here, and you want them to be paying you monies and advertising. You're sharing the profits.
And also, I actually want us to do like a cool type of thing, since it's going to be monthly, how about we show
monthly? I'm just finding out about this now.
something?
You didn't say anything about monthly. I'm
Stop
only
this.
kidding. I'm only kidding. I did get a heads up. I did get a heads up.
I think this is your idea, actually, to actually show them like a practice account to be able to get a feel of how to do the stock market. And
yeah, we'll start an account from scratch.
Yeah.
We'll start buying stocks. We'll start with we'll figure out what some of these portfolios have or what we can start with. And then we just start from scratch and get going.
Exactly. So anyone
we'll build a portfolio. Everybody else can build a portfolio as well, and we can learn from it, see what mistakes we made, see what we did right, and then see the benefits of putting your money to work.
Right. Okay, so let me share. So anyone that's listening, if you want to follow what's happening, like if you're a visual learner, you're gonna have to come on the YouTube. There, simple as that. So give me a second, because you know when it comes to Zoom and me, things be happening. But I know there it is.
Okay. Well, you can set it up and then we can come back with it, right?
Yeah. So there it is. I have it open. So boom. I hope. Yes, you can see it.
Oh yeah, we can see it.
Okay. So it's going to be a margin account, but let's just pretend it's like a cash account.
Yeah. Well, we're going to see if we can get these numbers adjusted, because right now it's saying you're starting with $1 million. And so that might be a little bit, I know there might be some millionaire listeners on here. Absolutely. But for those that aren't and are looking to start, I don't think they're starting with $1 million. So we'll have to figure out how we can get an account with a balance that's more realistic for some, so they can see the power of growing their money.
I don't mind having
$1 million. $1
million to
play with. I don't mind having $1 million either.
Oh man,
to be real though.
That is true. That is true. We did so when we did the second or the third, technically, with the youths. I decided that instead of giving them $1 million, we should give them 100,000 because it's more realistic, right? And did they learn? Did they learn? So let's see. So here we see the balances. So we have Canadian and we have US. So we know that that's a lot. See, we already made money from having the US stock.
From having US dollars?
Yeah, sorry, US dollars.
You haven't made any money yet. You put in 500,000 US dollars and you put in 500 Canadian. They're just giving you the equivalent in USD.
Oh, so this is interesting.
And the equivalent in CAD.
True. So I have buying power of $1.5 million. And that's because we have so
that's in CAD.
Sorry?
You have 1.5 in Canadian.
Correct.
And then you have 1.5 in USD.
But then you see the maintenance access. So how how is that possible?
No, it's just telling you how much excess cash you have or how much excess assets you have. And right now you haven't used any of it, and so you're at the maximum excess because you haven't bought anything yet.
True. Okay, so our buying power is this amount. We'll keep
probably better if we do this with an account that we can set up with reasonable numbers. So we'll come back to this.
Yes.
We'll come back to this.
But this is how we're going to every month get an idea of something. But before we take this off, is there any we should choose, at least choose two stocks that would be interesting. I think which one do you like? Is it Keys still? Keys is still your go-to?
My go-to? It
Yeah.
depends. There's a lot of good companies out there. But
Yeah.
let's what do I like right now? I do like the 5G space
Oh,
and
yes.
using that space. Um, and then you have some of the bellwethers that are out there, right? People, some of them I own or don't own, but the you still have the FANG stocks that are doing well. You still have so there's a number of stocks out there that not FANG ticker because that's a different company,
Oh, shucks.
right?
What's the name?
So you have well you when I say FANG stocks, that's Facebook, Apple,
Mm,
Amazon,
true, true,
Netflix,
true, true.
and Google, which you can get by buying an index. And so if you wanted to start with something, like if we're talking about somebody starting, you can
Yeah.
easily just look up the SPY, which has all of those stocks and talking about it, right?
Mm-hmm.
And then you could buy the SPY.
My gosh.
Yeah. Well, you're playing with $1 million. You can't be shocked about 400.
I know, but okay, so how about the one that
So
let's go with so you can get the SPY or you can get the SCLG. That's the one
yeah, let's find an account with you're spending $1 million. $50, $500 won't make much of a difference.
fair enough, fair enough. We'll go with the SPY because SPY is more popular. So as you can see, it's going up, but I know this is just a pretend thing. But man, would I be freaking out
It's
right
Saturday
now,
and it's still going up. Yeah, I know.
right? Oh, it's going down, down, down. So for anyone that is watching, we'll just do, this is just gonna be a little practice, and then we're just gonna buy. So there's quantity. You want to do 100?
Yeah, 100 shares. Just take the default.
Okay.
Whenever you're on a brokerage account, there's normally a buy button very close to the stock tickers. You just hit the buy button. Then you
And
choose your
that's
quantity. Just keep your
mm-hmm.
100 shares. That's there. That's a standard lot. Then your order type. You always want to place a limit order, and then you can put in your market price. That's in there that you want to that you max you want to pay. Even if you choose bid or ask, it's fine. But you want to make sure that you set your limit. So in this case, since you want to get filled, say 458, go mid or 458. Yeah, that's fine. And
Yeah.
then duration for the day, and then it's going in your margin account, no problem.
Mm-hmm.
Then
And
you buy.
so then you see this, it will tell you how much what you've bought, which is 45.88.9 US.
$45,000 US. Yeah.
And look at that, no commission. Yes. For
Yeah,
this
that's
one, for this one.
no commissions in a play account. That's right.
Right? Okay. So
And you submit. Now this is the weekend, so this I don't know if they'll fill it right away or you'll wait until Monday. That's as easy it is to place a trade in your account. Just like that.
nice and easy. And then okay, and then there you go to orders, and then you'll see that it accepted. It hasn't been executed yet, but that's because we are it's on a weekend. So hopefully I can show you guys this or in another account that's more realistic that we've gotten it filled. Or I'd have to record it one day and just like during the week and then some way, somehow show it to you guys.
Yeah, you can find a way. You just gotta
Right?
follow you on Instagram to get details.
Exactly. So this is one way to get a stock. Do you have another one in mind? Is the
The
5G?
other one that people like a lot is the QQQ,
Ah, yes, yes, yes.
which is another index that tracks more of the tech stocks.
See, it's a little cheaper.
Yeah, it's cheap as long as it's going to go up in the future.
Exactly.
And that's what's
Exactly.
important.
And ooh, wait. And wow, there's this level 2. See, I think this is new with Questrade because I never saw this before. Like
Yeah, it's a
this.
demo account. So they're probably giving you everything all on this one. But maybe you can see it on your regular account too.
Yeah. So let's do another 100 limit, and buy. So we're only trying to buy because we're not doing short sells. We're just keeping it basic. Keep it basic.
So look at that. Just like that, in 2 minutes, you've already bought 2 stocks.
Boy.
So there's no excuses for anybody. $50 and 2 fingers and a mouse, you can buy a stock just like that.
Exactly. And I know a lot of people like to look at like the high ones. I'm still looking at Tesla. By all means. Before we like wrap up, do you have let me unshare. Do you have a type of goal for your portfolio?
For beginners, I like to keep it inspirational. When you're starting out, think about how much money do you want to have in the portfolio and by when, right? When I first started, my goal was to have $1 million in the stock market in it was like 10 or 15 years out.
Okay.
It was my goal. And at that point, I was only saving like $50 a paycheck. So, but it was something that I was committed to. Like it was something I thought was possible once I learned it. Even after taking those hits of those companies going bankrupt, I still thought it was possible. And so start up with a goal that's realistic for you.
Yes.
That motivates you to want to get to. So starting today, I want to make sure that I'm working towards my $1 million portfolio, or my $500,000 portfolio, or my $100,000 portfolio, and I want to get there by whatever date. And that's as simple as the goal has to be, right?
Yes.
And then from there, let the learning take over. Find somewhere, look at something, read something, listen to a podcast, do whatever you got to do. Yeah, this one counts too. There you go. and just.
Should I ask the question that everyone is wondering?
What's that?
You said that goal. Have you managed to reach that goal, or are you close to that goal?
If I'm close to that goal, I'm happy with where I am. I'm
Guys,
happy
I might
with
have
where
to ask
I am,
alone.
and I'm happy with where I'm going.
Okay, that's good. That's good.
And I attribute it to setting that goal, right? And I have accomplished so much simply by setting that goal and pursuing. Right?
Oh, what
just the pursuit of that goal is a big one.
Yeah. So the QQQ order was filled just now.
Okay.
So I guess I'm waiting.
They're filling on the weekend. That's interesting.
Yeah, that's crazy.
Okay. That's not how the market works, folks. You don't get filled on the weekends like that.
Exactly.
But
unless
when you're doing simulation, then cryptos and others. We'll get to that.
Yeah.
Yeah.
I was gonna say, so that's dang. I don't think I have set a goal like that. I think ideally, you don't mind, 100%. So I do want my swing trades to cover my expenses, my monthly expenses. So I'm working on that. So I'm building it up and continue to grow it until I'm just like, it's time to cash out, because people do use this for bills and stuff. I just want to.
If you're trading for a living, yeah.
I'm a swing trader type of person. I don't never know. Maybe I'll be like an active investor, but right now I'm doing it part-time while I have my business and all that good stuff. And I want to funnel everything and just keep it going and things. So I'm glad you mentioned that goal, because now I have to like have them like set that number and then just put it on my computer and just say.
Yeah, I set the number and I shared it with somebody. I shared it with a few people to hold myself accountable.
That's right. Woo! I'll give you the number later. I'll give you the number. Because that's pressure. Oh man. Is there anything else? Like, because obviously this is so much information to
For today, I think it's good. I think, they've probably taken in a lot of information here. And people are probably looking, okay, how do I get started? Let's start. What do I do?
Yeah.
Just take your time.
Take your time.
Go on Google, look up or Bing, or what are those other search engines? Yeah, Bing's one. What's the other one?
Google,
Firefox.
Yeah, I have Firefox.
Go on whatever go on whatever search engine you use. Log in.
Is it Safari or whatever?
Safari, yeah. There you go. That's another one for the Apple users out there. and you just look up how to open up your account, get your account open. And if it's already open, then look forward to putting that money to work and picking a stock, picking an investment, and just learn from it.
And I think the best take that I got was just start and execute, but also look at the things that you have in your life to see if that's a way to make money. And also the S&P does things. The index funds will help those that don't understand it yet. And then you can grow and keep going and all that good stuff. So, baby steps. It's a marathon. It is a marathon.
A little bit at a time, but you'll be surprised to see how quickly things start to roll once you get started. And you'll look back and say, wow, I've gotten this far just by starting.
Yeah, and on the right path. I know there's times when all the hype is in our head, and those hype make you get burned. It buns you. So it is good to start simple and just go with the basic and just, and all that good stuff. What, Kurt? I appreciate you for coming back. Look at you.
I'm glad to be back. Thanks for the invite. The second invite came quicker than the first one, so thank you.
And also to celebrate once again, to celebrate a year of podcasting. Holy crow, who would have thought? Who would have thought, right? So I'm glad that you came back for the year anniversary, and also it's gonna be a great months coming just for everyone to learn. And soon you guys will learn like the other ones that we do. But first things first, baby steps. Do not fly before you crawl. Okay? So subscribe, share with people, because we're actually going to be doing like a practice account, and it's going to be awesome. It's going to be awesome.
Yeah, looking forward to it. Should be fun.
Right? Whoop, whoop. So let me find the song. I don't know why I didn't have it ready. But yes, folks, thank you for coming out. And what is it? Halloween? Soon? Tomorrow is Halloween.
Halloween is tomorrow.
Trick or treats.
Yes.
Whoever wants to give me free candy, by all means. I can't go knocking on doors asking for candy.
Okay, I'm already working out the candy I've been eating for the past 2 years of COVID, so don't drop any here.
I think what my mom was always like, aren't you gonna just stop doing this? I think when I was 12, I was like, no, look how young I look. I can still get away. I think I can still get away, but I'm not gonna do it. I'm too grown for it. Too grown. Cha.
There you go.
But yes, folks, enjoy. All right. Anyway, music. Flip, flux, money, literacy box. Flip, flux, money, literacy box. Flip, flux, money, literacy box. Flip, flux. Anyway, money, literacy. Working flux, money, literacy box. Yeah.